All right, welcome everybody. Welcome. It's Russell Markham here from VectorVest. I'm just double checking. Yep, all the sounds coming through. Picture moving. That's good. Thank you for the confirmations earlier. Record button is pushed. So this is being recorded. We'll send you out the replay. We'll also put it onto our VectorVest Australia YouTube channel. So if you go to YouTube, type in VectorVest Australia, and you can't miss us. We're on the channel there. All right, so I'm the Director of Education for VectorVest Australia. It's my pleasure today to present the high momentum stocks, or high Midas, momentum Midas touch stocks, as they're also known. Those high momentum stocks breaking out in price. Very important to find those upward momentum stocks at VectorVest Australia at the moment. We've got a portfolio challenge, and our top performers in those portfolio challenges are using these very techniques I'm going to show you today. And even in a pretty difficult market, since we released the competition 31 July, our top performers up, I think, just over 5% currently. And that's not bad going considering the challenging conditions. So what I'm going to show you today works really well, even in a challenging market. And when the market turns, you can bet your bottom dollar these will run even harder. So before I get going today, please, disclaimer statement there. You can check out our license numbers there on our webpage, and all of our financial service disclosure statements there too. All right, so on our webpage, all our licenses. In addition today, general advice only. Okay, I can't give you any personal advice. I'm licensed to give general advice only. I can't take into account your personal circumstances. Past performance, no guarantee future results. Forecast, backtest used or discussed today. It's intended as a guide only, and actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. Bit of a tongue twister to get through all that, but it's important just to let you know I can't advise you personally. All right, so without further ado, let's get right into it. Finding the best cherry-picking stocks, or those Midas touch stocks, or the stocks breaking out in price, however you wish to term it. What the term you wish to apply to it. What we've got in VectorVest is we've got in our viewers tab, we've got this watch list here called Midas touch stocks. So I'm going to load up VectorVest here, bring it across. Here we go. And here it is. So I've gone to the viewers tab. So if you're brand new to VectorVest, you've never seen VectorVest, at the end today, I'll give you a link. You can trial out the system for 30 days should you choose, for 99 cents US, call it $1.40 Australian. $1.40 Australian for 30 days, pretty good value. All right. We give you the opportunity so you can trial out for yourself for 30 days. And if you do trial out, this is where I recommend you come to begin with. Viewers, cherry picking, Midas touch stocks. So I'm going to give you a bit of a taste as to what this all entails. Why these given stocks here? I'm showing the top 5. Of course, I can show you the top 10 or 20 or 30. But for today, I just wanted to sort of dial it down just to 5. Otherwise, you know, your eyes sort of wander down trying to find your stocks in the list. Just concentrate on these 5 just to begin with. And what I'll do here is I'll just bring up the slide set and work through them carefully. All right. So Midas touch stocks. All right. So 81 in total as of the 12th of September. The first one on the list, as you can see there, Doug. Why does this make the Midas touch? And what is Midas touch stocks? All right. So I'm going to just start off slowly and then drill in a bit further. Let's just take it one step at a time. So the first one here, Doug. If I put the graph on here, nice, smooth left to right price pattern there. Brilliant price pattern, you know. Nothing wrong with that price pattern. All right, so it's gone up from, where was it, November of 22 at about, what, 50 cents to now $1.80. So up threefold. Very nice indeed. Notice this blue line, turquoise line here. You know, what is this over here? That is our stop line. So each and every day in VectorVest, we calculate a stop line. All right. So it's not someone behind the curtain jumping out each day saying, hey, you know, we think it's now time to sell. No, this is purely mathematically driven. All right. And what we want to do is we want to make sure we're finding a stock that is respecting its stop line. So here's the definition. It's an indicator when to sell or cover a position. This forms part of the Midas touch / explosive stock strategy. I'll show you that shortly. So it's a 13-week moving average of closing prices adjusted for fundamentals. So when you come back here, If your company's got lousy fundamentals, then you'll find that that stop loss gets very tight to the current share price. And the reason being is because we don't trust the stock as much. Stocks with lousy fundamentals, you know, when they start slipping, start falling away, then we start becoming nervous. But you can often have a very good quality stock that's having a bit of a tough time. The market might be getting sold down a bit. We give it more room to breathe. We trust it more because we know the fundamentals are strong. But when a company has lousy fundamentals and starts falling in price, you don't really want to stick around too long to find out, hopefully, if it comes back, because chances are many times it takes many months and often may never come back in price. So you want to get those top fundamental stocks. Hence, you want to get a nice gap between the share price and the stop price. All right, moving on a bit more, and we'll start putting it all together shortly. All right. Next thing I want to then take a look at here, and if we look here at Doug, all right, so the next one on the list here was Doug. So the next thing I want to draw your attention to is this red line here. You know, what is this red line? Relative timing. It's on a scale of 0 to 2. When it breaks above 1 and holds up above 1, this is a very good indication. So here you can see for Doug, you can see over here the RT, relative timing. I'll cover the definition now. It breaks above 1. Price was what, at about 50, 60 cents. It goes all the way up there to $1.80. All right, so that's the same stock there again, Doug, of course. Here, relative timing, breaks above 1, keeps rising above 1. Okay. So relative timing, it's an indicator of short-term price trend. So this is critical now for the breakouts. The direction, magnitude, and dynamics of price history are used to determine relative timing. So what if we were to get a stock that represents not only a stock respecting its stop line, but also where relative timing is breaking above 1 and rising? What if we just get both together? All right, so bringing it in here, we know that was respecting the stop line because we saw that one before. All right, we're seeing this relative timing holding above 1 and rising. I want to throw in a third one, and this is as complex as it gets. So here is the third and final one I want to share with you. Have a look at this indicator here, EPS, earnings per share. This is not a standard accounting earnings per share. This represents a 12-month leading forecast on earnings. So it incorporates historic, current, and then forecasted earnings. Well, what if you were to find a stock not only breaking out technically, relative timing, short-term price momentum on a scale of 0 to 2 above 1, it's rising. So here the technicals break above 1, they hold above 1. And in addition, we also back it up with solid fundamentals where that company's earnings are rising, not just the current, but also the forecasted earnings. And it's respecting its stop line. What if you put all three together? All right. So just a definition on the earnings. It's a leading 12-month forecast on earnings determined from a combination of recent earnings performance, traditional fiscal and or calendar year earning forecasts. All right, so there's the definition on EPS that VectorVest does. Here we are. So we put all three together. Respecting the stop line, earnings are going up, technicals are breaking up and holding up. That's how you find these explosive Midas touch type stocks. All right, that's what you're looking for. So, you know, if I jump out of here and just jump back into VectorVest just to show you, right, so there we are live in the VectorVest system. Here is Doug. Here's the next one, Meta Group, right? But graph this one here. Let's do it. Let's change the layout to begin with. VectorVest simple, I'll put on. All right, so the first thing I want to look at here is it respecting the stop line? Apart from a little bit of a blip there, it's been respecting it certainly from this point onwards very nicely. All right, so tick, respects the stop line. Put on our relative timing. I'll just make this jump out a tad more for you in attendance today, just so you can see it more easily on your screen. Here we are. Relative timing breaks above 1, and there hasn't broken below 1 since. Technicals are lighting up. It's respecting its stop line. And then I'll bring on the earnings, a 12-month leading forecast and earnings. Earnings looked like they were struggling somewhat and then got going. Here they're a bit sort of flat line and boof, up they go. And something's taking place here, big uplift in the earnings. So at this point here, I go respecting the stop line, technicals above 1 and holding, Earnings now kicking up. Maybe by the time you see the second iteration in those earnings jumping up, maybe around about here, you start saying, well, this might be one I consider. There, where was the price? Just tidy it up a bit. So there we are, 642. And where's the price now? 768. That's a nice pop in price. All right, let's close out. Let's go to the next one. MMA Ultra. Notice how easy it is. It's all there in this watch list. This watch list is updated each and every day. All right. It uses mathematics. All right. There's a lot of mathematics that goes in behind this. It's rules based. It does it all automatically for us. So it's not dependent on, one or two people, for example, to come in and effectively populate the list. It's done mathematically. So you can be assured that each and every day it's updated. All right. And so the next one on the list, the MMA Offshore. Let's share the technique again there with you. This one's brilliant. Here we go. All right. Look at that in recent times. Yeah, look at that. Huge pull away from the stock price as the fundamentals start improving. Respecting that stop line. Remember, it's a 13-week moving average of the share price adjusted for fundamentals. And you can see there's a big gap between that stop and the share price, telling us that the fundamentals on average are very strong. Technicals exploding upwards here. They break above one around about here. Great. And the earnings, look at that big uplift in the earnings in recent times. Huge uplift in recent times here. All right, if I pull it back just a tad more here too, you can see those earnings have been heading in the right direction, up and up and up and up and up and up. And then a huge uplift here. Reminds me a bit of NVIDIA's uplift in its earnings in recent times in America. Huge uplift in their earnings. I like to see that when looking to go to buy a share. All right, so here we go. All stacks up, and no surprises to see just how well that one there is performing. So you can see here where the relative timing crossed above one, around about, give or take around about here, you can really see it breaking above one. All right, big pull away here from the stop line. So leading up to that point in time there, that's all we could have seen. And if I pull it back just a tad, all right, that's all we would have been able to see at that point in time. We can see it's respecting the stop line, came and sort of touched a bit, but still respecting. We saw a consolidation in the technicals. They slowed down. Then we started to see the turnaround. So here you got the early signal. And around about here, I think it's fair to say that at that point, you start feeling a lot better. You go, okay, this provides some opportunity. 133, price now at 144. So that's still early days. But with this big uplift recently in earnings, that certainly will be interesting to keep watching this going forward. All right, let's close out this one. Let's go to the next one, Gud Holdings. So you get the idea what I'm doing here, right? It's all there on a plate for you, the cherry picking, and then I just come in and run my final checks and balances, right? So step one, is it respecting the stop line? Yes. Step two, I'm coming in here, making sure the technicals are lighting up. Yep, great, and they're holding above one. Step three, our earnings kicking off. And, it's pulling it back a bit here. I can see this one hasn't been as impressive, all right? You've had quite a bit of downside to the earnings. You can see that correlation as the earnings here started falling. I'll just bring this back just a tad. As the earnings here, started sort of falling, so did the share price. All right, here the earnings are starting to turn around. Share price is now starting to turn around. So still early days in this one here. We're just starting to see that uplift there in the earnings. Technicals holding up, respecting the stop line. This is early days. This may very well prove to be a very interesting entry point. Again, I can't advise you personally what you shouldn't do, but it looks like it's lining up to be pretty explosive. All right, closing out of here. Car sales. Let's have a look using the three techniques again. All right, so here we go. Brilliant set of earnings. Great. Technicals broke above one here, and they haven't fallen. Look at this just out of interest, where the technicals light up above one at $20.32. It's now $29.90. You're seeing a rising set of earnings in combination with a respect to the stop line. So all of those are stacking up, and it's no surprises to see that running. So as long as this still all continues to hold up, the technicals, the earnings, as well as the stop line being respected, then you would expect on average for this to power on. I've got a question that's coming here from Robert. What about when relative timing gets too high? Well, I suppose the thing is, you don't know if it's too high until the power of hindsight, because then you'll see it falling off, from a high point. As long as it's holding above 1, that's what I say. As long as it's holding above 1. Now, if you're starting to see it falling and getting pretty close to breaking below 1, like here, like there, you start to see it falling. Well, there it gives you an early warning to be careful. All right, so you just want to wait for it to sort of resume again and not continue to fall. Here it got pretty close as well. That's okay, as long as it doesn't break below 1. What gives me a lot of confidence when picking these types of stocks, and that is to make sure that their earnings are going up, right? So yes, there might be waves on the technicals because, stock doesn't just keep going up in a straight line. It sort of comes in ebbs and flows. Here it goes up, comes down, goes up, comes down, goes up. It's going to probably have another little breather again at some point. And that's normal. That's to be expected. But as long as the engine room, those earnings continue to drive upwards, then I'm feeling pretty confident. All right, I'm feeling pretty confident. I do not want to be buying into a company where the technicals are deteriorating along with the earnings. When that starts to take place, and then you've got to watch out, because then you've got technicals falling, being backed up by the earnings. That's not a good place to be in. So, if you go back historically in time, let's see if the stock did do it at some point in time. It's had a phenomenal set of earnings in recent years. I'm trying to see if I can find a position there where, look at that, the earnings just continue to power on pretty much indefinitely. And look at the share price. It's gone from, what was it, $7 to $29 because those earnings just kept going up. All right, so that's not a good one to demonstrate there because it's so rock solid. Here's one that's got a few ups and downs in terms of its earnings history. So here we are. If I zoom into BHP, we all know the almighty BHP. I've just got to give it a few seconds to recalibrate. There we are. It's a bit neater. So if you look at BHP, here the earnings are falling. Share price goes with it. So if I'm looking to buy into that type of stock at that point in time, and I'm looking to buy and say here, and I'm seeing the technical starting to slide, and here they break below 1, you'd have to ask the question, why would you be looking to buy into such a stock when you can see the overall trend of those earnings, even though it was coming up slightly, had been sort of falling for quite some time. It'd be a very brave individual to want to get to want to be buying in here with falling earnings and falling technicals. Rather, you want to be patient and wait for the turnaround to take place, and it finally did. It took some time, it took some patience, but when the turnaround occurred, like here, then we're back up again, and away we went. Here, the earnings turn around beautifully. All right, there's the earnings, the turnaround around about sort of 28 December of 2016. The earnings turned around, and away we went, and the technicals on average held up, although they've sort of jumped up and down a fair bit. But the story behind this was that the earnings took off. The price went from 25 to now over $40. All right. So to make it easy on yourself, step 1, hop along to the Viewers tab. Step 2, go to Watch List Viewer. Step 3, click on Cherry Picking, and then click on the Midas Touch stocks. And they're presented to you on a plate each and every day. Now, for those of you that are long-term subscribers to VectorVest, you'll know that the true definition of Midas Touch stocks, if you want to go back to the pure definition, if I put on the Midas Touch layout on the graph layouts here, so if you're new to VectorVest, don't let this put you off. It's just to give you an appreciation. We apply a 40-day moving average on the relative timing. Remember, we looked at relative timing, that the technicals. We smooth it out using 40-day moving average, and we smooth out the stop line using a 10 and a 65-day moving average. And what we then do is we say, over the last 3 months, if all 3 of these are hitting a 3-month high, it meets the definition of a Midas Touch stock. So you can see here, right, all 3 of these hitting a 3-month high, and there effectively is your share price. So to cut a long story short, we're using some pretty sophisticated technical analysis to get you these stocks. What I've done today is I've just given you a very nice, easy to understand graphical representation where all I've done is I've said, okay, I know it meets very strict technical criteria, but what I want to do is just overlay it and just make it even easier to see for you. And all I've said to you is make sure that technicals are above 1, make sure that your earnings are rising, and make sure that the share price is respecting the stop. Voila, that's all you need. And you start picking these types of stocks, you're on your way. Here, let me prove it to you. Here's proof in the pudding. If I click on portfolios, what we're doing at the moment is we're running a VectorVest stock picking challenge at the moment. All right, so here, contest portfolios. You can enter the competition in if you want at the moment. All right, and so we've got a contest portfolio challenge. All right, here's my portfolio. It's had a huge surge with those stocks recently. It's sort of consolidating a bit at the moment. If I click on the leaderboard, we started this on 31 July. All right, it's open to all of our subscribers. Here's our leader at the moment. So it's not bad for just over 4 weeks, about 6 weeks now. Into the competition, up 6%. And look at these stocks here. So you could jot them down for a bit of fun and then have a look. Look, Doug, Flight Center, FLT, IPG, MAD, and PME. I'll just jot those down and show you those in the VectorVest system. All right, so here were some of the ones. All right, remember Doug? There it is. All right, so you put on exactly what I've shown you today. All right, and I'll just change the layout here. It's a simple layout. I'll just make this a little bit neater and easier for you to see. So there was one of the stock picks that are doing really well for the winner at the moment in the competition. And look, surprise, surprise, there it is, exactly as we teach it. Technicals holding above 1, earnings rising, share price being respected by the stop. All right, there was Doug. Let's put in Flight Center, FLT. Let's see how this one stacks up. All right, so 10 out of 10 for the earnings. A little bit sort of sketchy on the stop. It's sort of broken there. It's probably wouldn't be my first choice in that competition. Generally, the technicals are holding above 1, but this one here, it is bouncing a bit, so I probably wouldn't be as keen on it. But nonetheless, the general trend, although it's a bit of a more volatile journey, it's still very good. It made some very good returns. What was the other one? There was an IG. So you get the idea, right? Was it? What did I say? Was it IPG? I think that was the one there. All right. So let's have a look for that entry. Yeah, beautiful earnings, respecting the stop line. Got pretty close there. One thing I'm not as keen on is the technicals are starting to slide. But having said that, remember what I also noted: if the technicals are starting to slide, but the engine is still strong with the earnings, well, then I am prepared to give it a bit of a leeway, provided that the technicals don't break below 1. All right. The other one in that stock entry, winning entry at the moment, is Midas Group, and we've written about this in weekly essays over the last couple of months. And this is just textbook, absolute textbook. Earnings, voila, perfect. Beautiful profile. Technicals, apart from a little blip here, have been holding above 1. And look at the respect that share price is giving the stop line. The 13-week moving average of the share price adjusted for the fundamentals. All right. So I hope that gives you a lot of confidence. The last thing I'll leave you with, so it doesn't have to be technical. You just simply go to that stock cherry picking folder and away you go. I'll leave you with an additional one today. All right. So here's one additional one for a bit of fun. Incredibly powerful technique again. In the VectorVest system, we have this tool called Unisearch. What Unisearch will do is we'll go and look for given parameters and do the work for you. So rather than having to graph it, VectorVest will automatically work it out for you. But nothing beats graphing. You should always go and graph as well. So in this one here, we're going to find shares over $1 that are buy rated. In other words, good fundamentals and technicals on average. 100,000 trades a day to ensure liquidity. And then what we've done here is we've said earnings. Remember that blue line, the earnings per share? Make sure that the earnings have increased by 25% or more over the last 13 weeks. All right. Make sure they've grown by at least 25% or more. Why? Because remember what we just seen here. If we just turn all this off and just simply keep the share price and earnings on here, when earnings rise in a share, there's a strong correlation between the share price. So if we can go and find those share shares where the earnings are growing 25% or more over the last 13 weeks, then we've got a very good chance of also picking on those shares where the share price has gone up nicely too. All right, so let's do it. Let's show you how to find it. So in Unisearch, right, the folder I'm going to here, or the group, is called Delta Search of Stocks. So you just simply go to Unisearch, Delta Search of Stocks, and in here you're just going to find explosive EPS stocks. There it is. So that's the search. So it's Delta Search of Stocks, explosive EPS stocks. Don't worry about all the other ones. This is the one you want to go to for those cherry picking ones. All right. In this example, you can try all the other ones too, but this one works a treat. And run the search, and look at that. Surprise, surprise. Doug, MRM, TLX, Sol, etc., etc. It's all there. All right. And then you just simply come into here, and you can graph those given stocks again, and away you go. You know, put on your relative timing, you know, put on your earnings. I'll just make that jump out a bit more again. You know, relative timing, your earnings, and your stop. Make sure your shares respecting stop. And there you go. Yep, that makes the list. Yep, that makes the list. You know, this one here, I like the earnings. I don't like the technicals. The technicals are a bit sort of up and down. The general trend's good if you're patient and you're willing to ride out those volatile fluctuations, but I don't know about you. If I can get a smoother stock, I'd rather prefer that. So that wouldn't make my list. This one here is sort of touch and go. I don't like that big pull down in recent times, but I can't fault the earnings. Earnings are pretty robust. All right, so you just work through and you pick the ones that jump out and work for you. All right, this one here, I really like this big turnaround in the earnings at the moment. This is exciting to see. MFF Capital. The technicals have been pretty rock solid, and they haven't gone. Do they go below 1? No, it went bang on 1, so it didn't go below 1. That's good. It broke above 1 around about here, $2.29. It's now $3. I would have been very nervous holding on to that stock while the earnings were doing that, but obviously investors had a fair idea that things were about to turn around, and bang, up, up. Those earnings have been recalibrated. Now I'm feeling pretty good. I like the fact that I've got solid earnings, good technicals, and that stop line has been more than well respected at the moment. So this one here is a definite candidate for a breakout to continue going forward. All right, and away you go. So you just graph them and find them that way. So they're the two different ways to find it. All right, so the first way, viewers, you go to the watch list, you open up cherry picking Midas touch stocks. There they are. Technique number 2, Unisearch, Delta Search of Stocks, explosive EPS stocks. Run your search. Here they are for you as well. There at your fingertips. Nice and simple and easy to do. We don't have to get overly complicated. Do your technicals line up? Do your earnings line up? And is your share price respecting your stop? If all three make the grade after those 2 techniques, so the 2 techniques establish the stocks, and then what you need to do is go in and double confirm that on the graph. All right, so yep, all right, there's my short list per the 2 techniques. Now I'm going to graph them, do they stack up? And if yes, then they can make your short list for your consideration. That's how easy it is to do. And so then what you'd end up doing is just creating, you can create a short list of those stocks, and in VectorVest we can help you set up a watch list of those top performing stocks. And then you can monitor them each and every day and see how they go. All right, so just to show you how I'm going in the competition, early days for me. Here I am. I think I'm ranked 10th or so at the moment. I was 3rd or 4th. I had a bit of a drawdown in my portfolio. I've recalibrated again. So here I am, up 0.86 for about 6 weeks. All right, so early days yet. You can see I've had a big uplift. So you can see, surprise, surprise, there's Doug. All right, Duratech. Actually, no, I think I'm looking at the wrong one. That's not me. I am 19. I'm 11th. Well, that's me. I was going to say. Didn't look familiar. All right, so again, you can go and graph these and see what you think. AZS, Doug, MP1, NDQ, and RBTZ. You can go and have a look at those. For the ETFs, you're not going to get the earnings profiles because we can't give you the exact earnings there. but certainly for the stocks, you can go and have a look. And we've looked at Doug today, for example. All right, so you can see since the competition, look at that one there. Surprise, surprise, Doug's up 23%. I hate to say this, but it really doesn't surprise me to see some of these stocks that have surged up so nicely per the technique that I've shown you today. You'll see that happen time and time again. They won't all work out. All right, so for example, this one here is not working out down 4 and another one down at 4, but that's okay. You use your risk and money management rules and you stop out and you reapply again. And on average, all you need is 1 or 2 big winners that will more than offset any of the ones that didn't work out. So it's about being smart, using risk and money management rules. We teach all that at VectorVest for you as well. So you might want to check out VectorVest to see what you think with everything that we track. So the theme today was to show you those explosive breakout stocks. I hope I've done that well for you today for the Midas Touch and per Unisearch explosive stocks. Doesn't have to be complicated. You don't have to spend hours and hours trying to find those stocks. Literally it would take me 3 minutes each day. I'd log in, I go to viewers, and I just simply graph 2 or 3 of these. Yep, do they stack up? If I don't get any success there, I'd go to Unisearch, run the explosive stocks, graph them, 2 or 3 stocks, and that's it. They're my ideas for the day. I can then explore them further. That's how quick and easy it is using VectorVest to find those explosive stocks. All right, the last thing I'll leave you with here, if you're interested in taking out a trial today, we offer it, actually, we've currently got on special for 99 cents. All right, so we'll give you access to our weekly videos and essays. You get invited to online investment club. Our investment club is not this Saturday, it's next Saturday, Saturday the 23rd, I think it is, 23rd of September. You might, if you want to join, make sure you join in time because we've got a really good speaker there for this Saturday. Can't wait to find out more in regards to that talk. So I won't spoil the surprise for those that are members. You'll see the invite going out shortly with the guest speaker. And you can access all the portfolios that we track each day. All right, there it is, www.vectorvest.com.au/trial. There are all our numbers. Just on that, just before I go, the other place to find an explosive stock, and that is viewers, trading system viewer. You can look at our different performing portfolios. So VectorVest fastest growing stocks, for example. I click on this one here. Not only do you get to see the equity profile and the returns, but more importantly, you get to see the stocks being held. So here is that portfolio. Brilliant. It's going up pretty well. It's up, what is it, over the last year, up 11%, year to date up 14%, 620% since 2012. It's all well and true, but what is it currently holding? So you can come in here, look, C79, DUR, look, surprise, surprise, Motor Group, MRM. A lot of these were ones that we saw today. So they're the current holdings in there, which is effectively driving that portfolio. So that's all part of your VectorVest subscription. You get access to all of this as well. Okay. So I hope you enjoyed it. I'll leave the end slide there. It's got the link to the trial. It's got our toll-free number to call us. It's got my email address if you'd like to email me with any questions. Let me just see, is there any other questions does anyone want to ask any last questions before I log off? I'm most happy to respond to any question using the VectorVest software as well, if need be. I hope you got a lot out of it. It's a technique to find those explosive stocks. And once you know how, it's then having that discipline to not just hang on at all costs. It's easy enough to buy a stock, but you have the discipline to set the risk and money management rules if it goes against you, to move out, and then to reapply. And if you have that discipline, you can make some very good money. But I think where a lot of investors go wrong is that they buy one stock and then they kind of, well, hopefully now it'll work out. In buying and holding and hoping, especially for explosive stocks, can be quite a dangerous strategy. You've got to be nimble. You've got to be quick-footed as such. You've got to go in. If you make some good returns, lock the profit in, reapply the technique again. Don't just simply buy, hold, and hope, oh, well, I'll buy this for the next 5 years and hopefully it keeps going up forever. You do need to have your exit points ready if it doesn't work out. All right, it looks like all the questions are coming to an end. Hope you enjoyed it. we'll get this up onto the YouTube channel, and we'll get the replay out as well. All right, thanks everybody. Bye for now.